That's why they've implemented this insurance.
So the first thing, let's establish what is CMHC insurance.
So CMHC insurance is basically like, it's third party, but it's like a government program that works with any bank that you go with. When you go to the bank, you say, hey, we're going to buy a home. Typically, you're going to have to put 20% down. And, quick math, if you're buying $1 million homes, that's $200,000, and we haven't even touched closing costs.
If you're buying a $500,000 house, first-time home buyers, it's $100,000, and it's not easy to get $100,000.
I would tell you, it doesn't matter what your income is, especially in an expensive city like Toronto. It's really hard to save 100, 200 plus closing costs. That's why they've implemented this insurance. So the insurance is basically you put down, let's say 5. If it's a 500K home, it averages out, right? The advantage of this is, again, ease of entry into the market. That's the whole point of this video and what the government is trying to do.
Even a lot of times, what people say to me is, well, I'd rather put down 20% because then my interest rate is going to be lower. But the thing is, it actually doesn't work like that. The banks, they actually prefer that you have that CMHC insurance because now the mortgage is insured. So once they know that it's insured, it makes it actually easier for the banks to give you a lower interest rate. And now you're paying even less and putting down even less, which makes your life a whole lot easier, especially as a first-time home buyer.
And sometimes the rate difference between putting 20% down and getting the CMHC, it could easily be like 0.3 to 0.5%. And if you look at the 5 years, let's say you have a 5-year term and you look at that, many a times you'll save on interest. When you do the calculations, sometimes I did a calculation recently for a client, it was about 20 grand over just 5 or 6 years. And I'm like, yeah, you do have to take part of this program, of course, but you get to keep the extra cash that you have, maybe the extra 10%, and you get better rates. I look at the 5 to 7 year period, because in a year, yeah, you're like, I'm shortfall a bit, but it's about getting into the market. That's the most important thing.